Alright, what's up with you guys? Your boy Kings right here. You're welcome again to another day with an ICT Forex trader. It's a new trading week. Alright, just as I always do, every single week we do pre-market analysis and project what probably markets will be doing for the week. Alright, so I trade ICT concept. My name is Kings. In case if this is your first time of joining me, okay, we're taking you to the chart. We'll be doing pre-market analysis based on ICT concept, right? Before we go to the chart, price books majorly based on liquidity, from internal liquidity to external liquidity and vice versa. Okay, the two internal liquidities I use is the FVG, okay, and the order block, and the external liquidity is either buy side liquidity and sell side liquidity, or relative equal lows or relative equal high. So these are the major liquidity areas I always target, okay, when I'm doing my analysis. Personally, I always stay on daily time frame to determine my daily direction bias. So once I do that, then I'll go to my lower time frame to trade in line with the direction of bias. All right, so I'll share my entry model here on my YouTube channel. Okay, just check it out, or I'll put it on the screen so you see the name, then search it out, go through it, and maybe you can back test. It may be your model, right? So that is it, guys. I'll be taking you to the chart, then we'll be looking at, let's see what the week holds for us, right? What to be anticipating for the week. You all know I trade Euro USD, okay, so I'll be analyzing Euro USD. I also analyze the XY. Maybe if you trade any module pair or any the XY correlated pair, then you can actually use it to determine the direction, okay, of your pair. All right, so personally I trade just one pair, which is Euro USD, and every single week, at the end of every week, I also do the review of the trades I take, okay, which I always tag one pair, trading one pair, and one model challenge, right? So it is in episode. Last week I dropped the last episode, which is the episode 4. So after trading this week, I also dropped the outcome of the of our trade, just trading one pair and one ICT model. All right, so just to let you know that you don't actually need to trade a lot of pairs for you to become a consistently profitable trader. Okay, just sticking to one pair can actually help you to be more focused, right? To always wait for your setup and to follow your trading rules. Okay, so that is it, guys. Now we'll be going to the charts. We're taking you to the chart, then we'll be looking at price. Let's see what we have price have for us the week. Okay, all right, guys, yeah, welcome back to the chart. Okay, now looking at price, this is Euro USD daily time frame. Okay, so we'll be analyzing the price. Let's see what price holds for the week. Okay, looking at daily time frame right here, you can see before we determine the directional bias for the week and for the day, okay, we first ask ourselves these three questions. Number one is, where is price coming from? All right, where is price coming from? Where is price currently, and where is the next draw on liquidity? And how you determine where price is coming from is look for a swing high or a swing low that is recently taken. Okay, that is the last swing high or swing low that have been taken, okay, which serves as external liquidity. Okay, so now you go, what is the swing point that have been taken recently? The swing point taken is this high right here. This high, I put stopwatch, right? So this high is the first swing high that have been taken. Okay, and looking at that swing point, you can see this is a weekly FVG that's situated right there. So it's a weekly FVG right here. Okay, you can see that weekly gap. Okay, it's a weekly FVG, right? So it is a higher time frame liquidity zone, and a swing point have been taken. So now the question that answers our first question, which is where price coming from. So price is coming from this swing high right here, now going to the downside, right? And as I said, price books measured based on liquidity, from internal liquidity to external liquidity and vice versa. Now looking at the weekly time frame, now you can see price have taken this swing low right here. You can see this swing low. So you have taken this swing low right here. Okay, so and it formed a swing low already. It formed a swing low. So last week formed a swing low. All right, now but if you go to monthly time frame, you see that there is a wide gap below here. There is a wide gap in the monthly time frame. Sorry, monthly time frame. So in monthly time frame, there is a wide gap here that price needs to trade to, and already the previous month low has been taken. You can see this previous month low have been taken in the monthly time frame. So overall, price is actually trading into this gap, okay, because it's very, very wide and price cannot unsee it. Okay, so it's very, very wide. Price cannot unsee it. So now looking at our place now, this swing point on the weekly time frame, what it signifies is a reversal. It confirms reversal now. But because there is a higher pool of liquidity in the monthly time frame that price trading to,
I think price may likely be expanding to the downside and taking out this low. But for me to confirm that will be expanding to the downside in the weekly perspective is if the previous week low is taken. All right. Normally, I used to follow price. I don't actually predict. Okay. I just react with price. Anything price offers, I'm in, right? So now, for me to confirm that price wants to continue to the downside, then I'd like to see this low taken. Okay, once this low is taken, then definitely this sensor liquidity right here will take, and then price will be dropping into the monthly gap, right? So now let's go back to the daily time frame, because that's where we are staying to determine our direction bias, right? So now in monthly time frame, now you can see price have taken external liquidity now, so it's kind of a change in market structure to the upside. Okay, after taking this low here, so change the market structure to the upside, that's what this may signify. But because there's a weekly level here, it may actually help price change price. Okay, so for now, what is the major direction bias? First of all, we answer the question that price is coming from a swing high right here. A swing high is an external liquidity. So after external liquidity is taken, the next thing is internal liquidity to be repriced. So now looking at this range now, you can see price actually returned into at least below the 50% of this range, so which is the OTE entry. Okay, so it returned into the discount price. So once price gets to the discount price, you see reversal confirmed by yesterday candle, which is Monday. So Monday confirmed the swing point. So now today I'm bullish, which is Tuesday. Today is Tuesday, so I'm bullish. I want price to fill this completely now. Okay, once it fills this, we will maintain that bullish direction bias until reversal is confirmed, right? So because weekly time frame is actually suggesting that price should continue to the downside, okay, because it is coming from price is dropping from this gap, okay, this gap. But daily time frame for now is suggesting that price should continue to the upside. You understand? Monthly time frame is suggesting price will continue to the downside. So monthly and weekly is suggesting price will continue to the downside, and monthly and weekly time frame is more significant than the daily time frame. But currently, we need to trade what we see. What we are seeing now is that price is still bullish on daily time frame. Okay, so now where is the joint liquidity on this, just to fill this gap right here? So you can see this gap here, so you expect price to fill it first. Once it fills it, we maintain that bullish bias until maybe a reversal is confirmed. A reversal, how do you confirm reversal? It can either be a swing point, okay, that is formed, a swing point from the daily time frame, or break a market structure in 1 hour or 4 hours. Okay, classical break a market structure, something like this in 4 hours. So you may be seeing, let's see, so something like this, then take it out, then return, so this kind of stuff, that is a classical breaking market structure, either in 1 hour or this thing, or 4 hours, then you may change direction because price reprice this. So therefore, if maybe today, which is Tuesday, something like that happened, therefore Tuesday may probably form the high of the week, then we will be targeting the previous week low, then this low here, then into the gap right there. So for now, I'm bullish on daily time frame. I'm expecting price to fill this gap completely. But if this gap fill and no reversal confirmed, then my next target is to take out this high right here. Okay, so take out this high right here. So now that is the expectation on Euro USD. Now let's check the XY. So you will see that the XY most times do opposite to what Euro USD is doing most of the times, because the most correlated pair with the XY is Euro USD, right? Most correlated pair with the XY is Euro USD. So now the same narrative on the XY. Okay, in weekly time frame, let's check weekly time frame. So price have popped into this. Price have popped into this gap right here. After taking out this, you can see this bicycle liquidity in daily time frame. After taking out this bicycle liquidity, so it reversal pattern, that is a swing high. So now price is meant to drop to the downside. All right, it's meant to drop to the downside. So because of that, now let's see in the daily time frame now. This low have been taken, confirming price to continue to the downside. Okay, so we may say that this is a classical break in market structure on daily time frame. Okay, but because this is a weekly level, is kind of this. I think this probability, please. I think this is more of a manipulation. All right, but I don't actually predict anything that happen. I trade in line with what I'm seeing. Okay, so now what's happened now is that price have actually taken out this low external liquidity, which is where price coming from, coming to the internal liquidity. All right, so you come into the internal liquidity. Ideally, you can see these 3 consecutive bullish candles represent other block. Okay, represent other block. So price traded into it maybe at the middle of this. Okay, you can see it now. So now if you draw the range, you draw the range, you see that price have reached at least over, it have reached the premium level, right? Premium level. Premium level is level above the 50%. So you have reached the premium level now. So now, once you reach the premium level, what is happening? We are selling, okay? So because the best place to sell is from the premium, okay? Now, that makes us to be bearish on the XY for now on daily time frame, okay? So now the draw liquidity is for price to fill this gap right here. First to fill this gap right here. Then next is to take out this low as an external liquidity, okay? But if we see any swing low high here, sorry, any swing point here, then we'll be changing our bias to bullish. Why? Because higher time frame suggests that price should continue to the upside. All right, but because we are following the pattern, we are following just confluence is what we see on daily time frame. We are still bearish on the XY for today, okay? So I may be bearish. I will keep selling until reversal pattern is formed. The reversal pattern can be a swing point on daily time frame, or flagship pattern on daily time frame. Second option I will use for swing point is, sorry, for reversal confirmation is classical break in market structure to the upside from this internal liquidity. That's the expectation on the XY, okay? So I'm expecting price to be selling. I'll be selling in line with what I'm seeing now, okay? But ideally, I'm expecting a bullish move on the XY. I'm expecting a bullish continuation on the XY, right? But for now, I'll maintain a bearish bias because that's what daily time frame is still telling me for now, okay? But I just want you guys to know that I'm expecting a reversal at this any moment from now, okay, to the upside. All right. Then where is it drawing to? If price should go to the upside, where the draw liquidity? At least it will be reaching for at least this middle, that's the middle of this gap. Okay, so the XY have reached its own gap, but EURUSD have not. All right, so that's why we're expecting a further drop on EURUSD. So, but I'm expecting price to reach at least this middle of this gap, which is consequent encroachment. Then probably going for this high because price is coming from a gap.
Alright guys, that's what I'm looking out for on the XY and EURUSD, okay? So price is kind of very complicated in a bit to me for now. Why? Because at the internal liquidity, there are no FVG where price dropped to in the daily time frame, okay? And because of that, we already see a reversal pattern already, which is swing point. So for EURUSD, we have seen a reversal pattern to the upside. The XY, you have seen a reversal pattern to the downside. So that's why I actually maintain the bias I see. Okay, I always trade what I see, right? Not what I think. But for what I think, I'm expecting maybe EURUSD to form the high of the week today and drop to the downside. But I'm more bearish. Alright, but whichever way, it may not actually hold. I always follow my daily time frame for bias. Okay, so but from what price is saying, based on where price is drawing to, we are actually more bearish on EURUSD and bullish on the XY. Alright, but for now, following the daily bias, guys, I am bullish on EURUSD for now and bearish on the XY. So maybe if we see any change, then I'll make another video and upload and update us, right? So that is it, guys. If you are new to this channel, please do well to subscribe right now. Subscription is very free. Subscription is free, okay? So just subscribe right now. Also turn the notification bell so you're notified anytime I upload on my YouTube channel. Alright guys, so till we meet again, I wish you all good luck and happy trading. Bye.